This company is down of more than 15% since 1 year, but with a massive 6% dividend that has been growing over the last year. So is it a great time or not to buy the Telus stock? This is the question that I'll try to answer in this video, and so I'll make a full stock analysis on Telus stock. So as always, after checking out what is their business model, I'll make a quick fundamental analysis on the business, and after I'll make a quick price prediction to see if this company is currently under or overvalued at the moment. So without losing too much time, let's get to it right now. Telus is currently one of the 3 largest telecommunication companies over here in Canada, and it currently shares about the third of the total retail mobile market over here. This company, created in 1990, has seen some massive growth over the last couple of decades, where it has notably had to fight 2 well-established companies in the name of Bell and Rogers. On its side, this company, that currently worth over $30 billion, offers a wide range of products to their different customers, ranging from different telephone, television, and internet services and products to different healthcare solutions. And all of these products and services are actually offered to over 15 million of Canadians all around the country. But in fact, when you take a look at the different products and services of Telus, you can divide them by 3 different branches. First, you have the general consumers branch, which includes all the kinds of services that are offered to the global population. After, you have the business branch, which is offered to small, medium, and large cap companies, and it offers a wide range of products and services to those businesses, such as telecommunication services, but also different IT solutions. And finally, you have the healthcare branch. This branch is quite special because this company will provide great specialized technology and data solutions to great medical organizations. However, as you can see in their latest quarterly earnings report for the first quarter of 2023, the biggest part of their total net income comes from 2 big businesses segments, which are the wireline segment and the wireless segment. And talking about their latest earnings, there have been a few great news that have catched the attention of the investors, starting with a great increase in the mobile and in the fixed customer growth of over 165,000 new customers. And this represents an increase of over 15,000 new customers compared to the same period but last year. And they've also been able to increase the total mobile phone additions of over 15,000 new customers over the last quarter. But in that case, why does this stock has lost so much value over the last couple of months? Well, one of the reasons that can explain this massive downtrend is that usually the telecommunication companies have some massive needs for capital expenditure, because as you'll see later on in the fundamental analysis, this company has a lot of debt which is mainly used notably for great innovative solutions, but also to maintain the great telecommunication and IT infrastructure and to operate all their different physical assets. And so you might be able to understand that since this company has a lot more debt, it means that it is also massively depending on the interest rate fluctuation. And as you've seen with the total increase of the interest rates, this has obviously had a pretty negative impact on this business. Nevertheless, Telus is still a top leader in the great telecommunication field over here in Canada that is set to continue to grow over the next couple of years, notably with the immigration that should bring over 500,000 new Canadians every single year for the next 3 years in the country. And obviously all of these newcomers will have big needs for great telecommunication services and products. But now, let's see what the numbers are telling us about Telus. As you can see, this company currently worth slightly over $37 billion with a pretty good price to earnings ratio of only about 25, which is showing us that this stock at the moment would currently be fairly and even undervalued. Add to this, over the last 12 months, we can see that they have been able to achieve some great profit and an operating margin of close to 16% and a great return on equity of about 9%. And over the same period, they have generated about $19 billion of revenue with an increase of about 16% in their latest quarterly revenue growth. But unfortunately, the scenario isn't as good for their quarterly earnings that have been diminishing of about 43% compared to the same period but last year. And as I told you earlier, an important and crucial news for the investors is the number of cash on which they currently sit compared to their total debt of over 27 times bigger than its total cash position. And with the recent increase of the interest rate of about 25 basis points that we saw on the 7th of June 2023, well, unfortunately, this could have a pretty negative impact on the valuation of Telus in the future. And a super crucial news that has convinced me personally to reinvest in that company is their massive quarterly dividend of over 5.63%, but that unfortunately has a quite high payout ratio of over 100%, which means that it isn't necessarily sustainable on the long term, especially with the high debt that they currently have. However, despite the pandemic, you can see that over the last 4 years, this company has been able to grow pretty well their total revenue, which gave them a pretty great progression in their total earnings before interest and taxes over the same period. And as you can see, despite the pandemic's impact in 2021 on their operating cash flow, they have still been able to continue to grow them in 2022 compared to what they were in 2020 and 2019, but they have yet to reach the same levels of free cash flow that they've had before the pandemic. And now, as always, to see if this stock is currently under or overvalued, I'll be making a price prediction of this company's value with many different evaluation models. Starting as always with the Peter Lynch valuation model, which is the addition of the future growth of the earnings per share with the dividend yield that you come divide by the price to earnings ratio. And with these criteria, you can see that this stock would currently be fairly valued at the moment. Unfortunately, we won't be able to use the dividend discounted model to evaluate the value of this company, since we can see that the average growth rate is bigger than the weighted average cost of capital. And as always, to finish, I'll be using the discounted cash flow model, which is an easy model where you come discounted all our free cash flow of this company to see what is its current intrinsic value. But as always, you need to start by finding out what is the cost of debt with the cost of equity, and after you find the cost of debt and equity, which is giving us our weighted average cost of capital of about 4% in that case. And so with all of these metrics, we can see that this stock would currently be worth about $70 in intrinsic value, which represent a massive buying opportunity on that side. As you've been able to see in this video, despite having some pretty bad momentum lately, Telus is still considered by many financial metrics as being a great undervalued stock at the moment, and its business model is offering great essential services and products to different Canadians all around the country. So if you're looking for a company that won't fluctuate too much in time and that should give you some great dividend income over time, well, Telus could be a great option for you. But on your side, if you're looking to find what are the best Canadian dividend stocks to buy in 2023, well, check out the video that's gonna be right over here, and I will see you soon. Peace!